Hello everyone, how's it going? In this video, we're going to talk about S&P 500 and the ETF called SPY. The market has been going through some huge volatilities as of late, and given that SPY, or S&P 500 in this case, is the world's most symbolic and significant exchange, um, it has also been obviously the focus of the public, including us. We might be at an important pivot point with the market for the years to come, and where S&P 500 will go will be a very important factor for valuation of equities around the world, as most equities follow what the economy at large goes. So in today's video, we will talk about the price action, the long-term tendencies, the statistics and sales strategies for the SPY ETF. If you appreciate my content, please consider to drop a like, comment, and subscribe to my channel. Also, please check out the links in the description section, as every help is greatly appreciated. Before we begin today's video, I would like to state a brief disclaimer. My videos cover my opinions on the current events and what's likely going to happen. It shouldn't be viewed as an investment advice and should be watched for entertainment purposes. My videos are prepared either immediately before the uploading or a few days before they were released on YouTube. So sometimes the price actions no longer reflect what you see by the time you view my videos, but nevertheless they would still be relevant as far as the analysis is concerned, because it is concerning the short-term momentums, not the immediate-term momentums. Also, the analysis aims to cover the securities as broadly as possible, with the fundamentals and technicals aspects. So we might talk about the long-term tendencies, the shareholder composition and fundamentals, and also like the market behaviors, in addition to the price action and the latest news events, because these will all affect your decision about if we should be buying a security, how many shares to be bought, and also when to buy them. With all that being said, let's get into today's topic. So currently, SPY seems to be hovering around $380, and unlike many other individual stocks, either in Nasdaq or the S&P 500, the medium-term trend has been ranging around the $400 level, not necessarily bearish just yet, showing a much greater degree of stabilization compared to many other specific stocks, which is, I guess, normal given its size and significance. We can see the same thing if we go to like VT, which is Vanguard's, I think it's total equities, meaning the larger, the more equities the ETF includes, the less volatile it tends to be. And overall, the market is showing a lot of indecision at the time, because on one hand, we don't want to go into a recession, because we would lose money. On the other hand, the same people who don't want to go into a recession are fully anticipating that other people are allowing this to happen or cannot stop this to happen. So right now, we're kind of trying to prevent an avalanche, knowing that the avalanche might happen anytime. So when we look at the S&P 500 in the long term, there is a very obvious uptrend in the price evolution, with an obvious acceleration over the past decade. This event has been triggered by the increase of money supply, also called quantitative easing (QE), around the world, in a low interest environment, forcing capital to go seeking like risks instead of earning very little or even negative interest rates. The demand for securities and equities therefore went up exponentially, propping up their prices. This growth has provided a lot of wealth for investors, but the same growth has also fragilized the very nature of these economies, because in the same period of time, the productivity didn't necessarily improve, just the price. So the prices went up, but the yields went down. The long-term tendencies in the index price levels dependent on the quantity of money around the world that's willing to be invested in equities, the yields of alternative investment options like bonds and guaranteed deposits, and the state of the global economy. So for the time being, all three factors are under stress. The quantitative easings have mostly ended, and for the economies that are still printing money, the newly minted capital cannot flow freely into the financial systems. The yields for bonds and commercial paper increased significantly, encouraging people to play it safe in those uncertain times. Um, Pulling like capital away from these equities and into the savings account, investment certificates, and commercial papers. This means that overall, there will be less money in the pool to buy corporate shares. And at the same time, the global economy also seems to be in a rough shape. The fears for recession has been present since the end of 2019, as the bull market has been going on for longer than anticipated, with a significant amount of bubbles already floating around and ready to be bursted. So going forward, we're likely going to enter in a period of confusion with significant downward pressure for the market. Some of these bubbles are going to be painful to pop, because a significant portion of the tech industry have been fueled by investment capital without actual capacity to earn a profit from their operations. Growth has been the keyword over the past decade without serious consideration for profitability. We are now in an era of disruptions where the creative fire might burn quite a few logs before giving any sort of creativity sparkles. So the Standard & Poor's 500, the S&P 500, is the index tracking the 500 largest market caps in the United States. It is also the most followed index for traders and investors. The equities listed on the index providing on an annual basis about 12%. So because it lists the largest corporations in the US, it provides an overview of the American financial market as well as the overall economy health from a very high level. The components of the exchange are updated on a quarterly basis, providing frequent updates to investors about what's included in the ETF. And despite the significant infrequencies, it's worth noting that it also has a few advantages. It covers equities, not necessarily other instruments, at least not directly. So the natural resources and the private equities are not included in S&P 500. It's also very US centered, so the snapshot might be different if we look at it from a purely global scale. We should also remember that equities are usually influenced by supply and demand for capital, which might be affected by fundamentals and also speculative reasons. For instance, the stock market might be very bullish because there is a hyperinflation, not always because the markets are doing so well. Another element that might affect the S&P 500 is the direction of international capital flow. Whether they tend to go from foreign entities to US or the other way around. In a way, the securities listed on S&P, they provide a broad picture of the state of the economy, the size of the asset bubble or the deflation of these, as well as the market confidence in the equities. In the long run, the S&P tends to stay relevant as long as the global trade remains an important factor for the economies, and that companies rely on equity sales to raise funds to finance their operations. In the short term, the S&P will have to weather the next 24 months before we can really determine if the market correlations are justified or if there is any sort of correlations, and if more significant investments can be committed. I would recommend to wait for a clearer picture. My personal opinion is that eventually a recession is unavoidable. How low things can go is uncertain, but I think that it's going to be lower than whatever they are now. The current price level essentially equals to whatever happened before 2020 began. Now, in the long term, I would say that buying SPY or any sort of S&P ETF would be recommended as a stabilizing factor and component in your portfolio, and also a way to owning equities without the individual stock risk. I would recommend to commit eventually between 15 to 20% of your portfolio in SPY, and to gradually buy this over a period of not only month, but I would say years.